welcome. You're watching The Money Show. I'm Kavita Thapliyal, and this is a very special edition of The Money Show, also because it's a year-ender, and also we'll be setting you up for your investment strategies in 2026. So, if you want to sum up 2025, this was a very chaotic year, unpredictable year, geopolitical tensions, trade tariff, but we also saw demat accounts and SIP numbers reaching record high, and what a comeback by gold and silver. I mean, the portfolio has taken center stage just because of the returns you've seen in gold and silver. But what's in store for 2026, and how would you like to navigate all the volatility? Will there be volatility? Let's understand all of this. Let's decode all of this in very simple language from the man himself, Swarup Mohanty from Mirae Asset. Hi and welcome to the show, and wrap up 2025, okay? Let's start very simple and very small. I want to understand how this year was from your lens, from your fund house lens, you know, relating it with a movie's name or a song name.
A movie's name?
Yeah.
Okay, I'll put it as Badalte Rishte. It was late 70s movie, Rishi Kapoor movie.
Okay.
Because, you know...
Why?
Yeah, because all those fixed relationships at a macro level, countries are changing relationships.
Okay.
Asset classes are changing relationships. You yourself say suddenly gold came back as the top performer while we felt equity was the top performer.
Exactly.
All the rules have changed. So all relationships have changed everywhere.
Okay.
And hence at a portfolio level also the relationships need to change. That's how I look at it. From our perspective, our job is easy. We are fund or product manufacturers. We just have to manufacture products and keep them sane.
Okay.
What it also did was, I think we saw a strong comeback in performance of our equity schemes.
Okay.
Which we'd gone through a, I won't say a lull period, but our positions didn't play out in the last 2-3 years.
Okay, that was because you had taken certain bets and certain calls.
Yes. And market is always cyclical, right?
Okay.
And then when, I mean, personally speaking, when the regulator and the central bank comes and says that market is overvalued, you have to take cognizance of that,
Exactly.
right? And not seen the two coming together.
Yeah.
I think from our portfolio position, we stood where the overvaluation was not there. And when the froth sort of settled down, our portfolios came out. We've not made any changes in any of our portfolios.
Absolutely.
But just brings out the virtue of standing to with your conviction on your portfolio has its merits over a period of time. And we saw that coming in across board comeback, which was very good to see as an organization.
Right.
Just showcases that our processes are intact.
Yeah.
I think debt assets now cross 30,000.
Absolutely.
Which is a complete deviation of what people think about us. No, we are not an equity fund house, we are an asset manager. I think some of our products that we launched on the passive side have been meaningful.
Yeah.
Simple point is
25 schemes in passive, right? 25 and 32 in ETFs, I think you've got. Of the highest amount of schemes in these two categories. I want to discuss more on that, but then you can continue.
And 50% of them are new ideas from our side.
Lovely.
Right.
Okay.
So we end the year as a more diversified asset manager than we are when we were, and that's the journey that we take as a journey. So all in all, good year for us.
So congratulations on the comeback, and for all the viewers who saw pain in Mirae Asset's few schemes, I mean, a lot of new ideas have really gained a lot of traction also in the last year, but then yes, it's a comeback now, and that's likely to continue now. But having said that, you know, one headline that from Swarup I can sense coming is mid-cap and small cap are nowhere around being your supporting characters in the lead story of your portfolio. They are the main lead characters now.
Yes.
Why?
No, just
and also, if I take a leaf from the Amphi numbers that we saw, where we saw small cap and mid cap again gaining back traction despite being super volatility in the market.
No, I think when you look at the underlying, and let's look at the fact that the last 3 years have been one of the largest public issuance markets for the country. It's one of the largest in the world. And most of the new issues have come in the mid and small cap.
Right.
If you remember, Kavita, we had only discussed in 2016 when we had closed which is large and mid now, the Mirae Asset Emerging Blue Chip. We closed it citing that there were not enough opportunities in mid-cap space. Exactly. That is not true anymore.
Okay.
The new issuances, and especially the number of industries that are being added because of this public issuance, like say mutual funds, but not there then. It's a mid-cap story. Hospitals, which will play a big part in the future of this country in healthcare, are a mid-cap story. There is a certain amount of change in the organized, unorganized being organized through hospitals and diagnostics. All those stories are mid and small. So just to have your portfolio represented in the totality of the market, you have to have more representation in mid and small.
Right.
Going to your Bollywood analogy, it is no longer a single single hero thing.
Right.
It's like that Amar Akbar, Antony, three heroes playing equal part. And very important part in how you mix them is a factor of your risk profile. But that cliched statement of your core being only large or flexi does not hold good anymore if you want to own the market.
But what about company performances? When we talk about mid-cap and small-cap, this really becomes a question. So how are we looking at that aspect of mid-cap and small-cap?
So personally, if you Google me, I'm guilty and I will stand by that statement is India is about mid-caps. I am a brash mid-cap fan.
Okay.
Right. And then it's the companies which were small have become better and on their path. So I am a bigger risk-reward person on mid-caps than any other segment because of India being a mid-cap globally also. Right. It's just emerging right now. So and for some reason, if you look at flow of funds, people have owned more large and flexi in the past, and the last 2 years have blatantly owned small caps.
Yeah, totally.
The meat, according to me, one of the very important pillars of Indian markets, the mid caps have been so far ignored by investors. Hence, I feel that if you start accumulating mid caps now, some great companies are available at good prices. You can actually strengthen your portfolio. Is my opinion.
Right. Talking about sectors, you mentioned hospital. Apart from that, what all is on your cards for 2026 and why?
I think we remain favorable to the banking segment, pillar of we've been more private banks, especially 2026. We've held them. But in 2020, we see some of the smaller banks coming out and giving us better option. I think pharma, healthcare remains core to us since inception. We continue that. Consumption in pockets is looking re-rated. So we will see a fair amount of those coming into our portfolios. And I think this whole thing of unorganized to organized, like I said, in the form of hospitals and diagnostics prove a very different sort of path to the market going forward. When a small part of the market becomes overvalued, it opens the rest of the market for a stock picking space. And then that cliched statement of market being a stock picker's market is what 2026 will be all about. It will segregate boys from the men, and that I hope we end up as the men in the market.
Definitely. Okay. No, but then let's also talk about the tone of the market. 2025 was very volatile, and obviously we had a lot of global factors leading us. Although on the domestic front, we've held our ground very strongly. Even now, everything looks very optimistic. Inflation under control. Growth is doing very good. Look at the demat account numbers, SIP making record high. Even the GST numbers are good. So, what, according to you, can drive which is not in our control?
Kavita, let us go back and look at the interview you and I did in 2025 beginning. Same time last year. And we had said that 2026 does not give us any trigger. Right? And hence it's a very important year to accumulate the asset. Right, 25. At that point of time, we didn't know tariffs would come.
True.
Now, with tariffs, the world is now before tariffs and after tariffs. Make no mistake on that. I think the first trigger and the first thing to get away is some sort of signature and agreement on that. That's something which the market will look at. Let's look at the fact that India put up 8.2% growth, stellar growth, and the market didn't take it. I mean, that's indication that something bigger is expected from the market. My opinion is tariff needs to be put out of the way. Once that, then the bigger elephant is out of the window. Then comes the most important thing is corporate earnings.
Absolutely.
Corporate earnings have to come back, and we saw a little bit, but not as much as we had thought it would. If you look at the discussion, we had said that maybe it can come towards the end of year, but we're not seeing too much, but we are hopeful. Some of the capacity utilization is beginning to come back, so maybe 2026 we'll see that. These two, till they don't come, the market will be in this zone. Be more in trading zone. Again, when you look at that same cliched statement of a fund manager wanting to buy a good asset at a good price, the good asset called India continues to be available at a good price. If you don't accumulate it, and this is exactly the same thing we had said last year, if you're not accumulating, the risk then is against you.
Against you, exactly. One more reason why it's very important to take Mirae Asset's view is because you also get a global sense of it. So when we look at the international market facing India, what's the sense when you talk to your your peers or your counterparts?
Our global allocation has changed a bit. It was India heavy 2024. Some amount of it shifted to China. So today our global So global allocation, which was really 30-40% India heavy, now is 50-30-20. 50 US. That's our own money is being invested, 30 to China, which is where 10% went up. This is an incredible story at the end of the day.
Absolutely.
And then 20% India. Now there is no fourth country. So these are the three blatant call from Mirae. US, China and India are the three countries we invest in. So that it cannot get more bold than that.
Right. What about FI confidence coming back? What about the timing over there?
Let's look at it from their perspective. They're getting very decent bond yields back at home.
Absolutely. True.
And you cannot take the impact of rupee on that. Rupee at 90 is a spoiled spot. Right. So when you look at it from a safe return perspective, forget everything about India. Make no mistake, India is the secular growth story of the world. But from their dollar return perspective, it's not making sense now. But what has happened is when you look at, I think some of the flows were discussed today, the DIs have come up and piled up our flows. So flows have been taken care of. But make no mistake, India needs foreign money. But there will come a time when there will be some sanity on this, and they will come back. Which other country? Maybe they will be a little slow now, but we could see some outflows continuing. But when the timing is right, it will come back. I'm more hopeful of our inclusion in the bond index that will get out a lot of money. Then I think that is more critical for us because our bond market also needs that big money in. So while whenever we talk, we get just restricted to equity flows. I think the inclusion of bond index will be a bigger figure.
So you're also an AMC that likes to experiment a lot. I just want to put the spotlight on your play in passives and ETFs. Do you think this is going to be a bigger space in 2026? Looking at the new kind of money coming in, looking at the investor interest coming in, the investor base also, it's largening in the ETF base.
Kavita, you talk to more investors than I do directly. This demography is changing dramatically. The next 5 crore investors that will hit the industry will be more in the younger regime than in my age. And trust me, they will take to more factors than flexi caps. Their risk-taking ability is different, their approach to investing is different, and I know their knowledge is superior to me and my father's generation put together.
Right, true.
Right, so their approach will be very different. This investor base is shifting from what used to be risk-averse investors to risk-seeking investors.
Risk-seeking investors.
Yes, yes. Make no mistake. You can see the flow. The flow is more towards the riskier products, and this will only grow. If we hold on to our past and not give them the product, they will find their own products. Outside the industry is my biggest fear on earth. Right? So the industry our job is to build products, talk about risks very, very openly without holding back. If we do that, then I don't want to underestimate the knowledge of the other person in understanding that.
Right.
I have to be very transparent in my risk discussion. And that's where is the play. Some of the factors that we put in, some of the new ideas or the new, say, the EV or the energy, these are areas which they will look at, and a mix of all this will form their portfolios. My portfolio was very different. My father's portfolio was also very different to me. But my son's portfolio will break away.
So what's going to be the new addition in terms of innovation and trying out something new that you'll be looking up at?
The advantage of having the passive play is that wherever there is an investable universe, we can create an index. It is not bound by the restriction, if I may call it, if I'm allowed to call it, of active investing where there is categorization. Right? It's a business of ideation. And ideation you can do endlessly in the passive side. So we will continue backing our ideation power and continue building new products. I think we just launched a dividend product which is looking very good. We're doing a concentrated Nifty product which is also looking good. We did EV, we did AI, we did energy, name
How
it.
had these themes fared so far?
So far, early days. But when you look at the future, if India does not go up the energy curve, India will not happen. Look at China, it's an energy story. I mean, I was there last month. There is no car which is non-electric. As a result, my cab fare was half of that of Mumbai cab fare. So it is a story which will happen. I mean, so you have to just sit there. The beauty of themes are they unfold over a period of time. And you'll see these powerful themes unfolding. So sitting early and taking the ride with them creates wealth.
It's important. Okay. Let's also talk about, the way we should be looking at the capex to consumption theme. Yes, there have been experts and reports, and we're also looking at the consumption theme slowly taking it up, but then do you think it will be taking center stage like the way we wanted it, or the way, we saw the GST Bachat Mahotsav happening and the numbers, the lagged effect obviously in Q3, which we'll be witnessing, but then what's your take on this?
No, I think what started as a very small part, now GST numbers are beginning to look pretty strong, and it will get stronger only. At the ground level, again, if I am allowed to, you go out in the street, somebody is giving an option of non-GST way. In spite of that proliferation, the GST numbers just pile on month, and that is where the unorganized is moving to the organized. That's the story of India. Maybe a little slow, can be faster, but the J curve can happen overnight.
True.
And if you're waiting for J curve to happen, then it will leave you behind.
Okay.
So you sit there.
You have to sit there.
I've been selling the consumption story for 16, 17 years now, and every year the consumption story gets re-rated. Right? New areas of consumption come in. So India is a consumption story. So it's probably the safest place to be in India.
Absolutely. What about gold and silver? Are they the mega caps now?
Okay, I'm asking a very important question. Is the way we used to view debt, are we going to view gold the same way? And form that as a core part of your portfolio. If you are a risk taker, maybe a little bit of silver, but my personal opinion is the risk reward will always be in favor of gold over silver.
Okay.
It is no longer a hedge product. It is moving towards the core part.
Okay, which is why we will see more participation in multi-asset allocation kind of funds and special niche products coming up.
I'm so happy, Kavita, you asked that, because when you look at the probability and the back testing, which has nothing to do with the future, but just shows an indication, the probability of getting median return is higher in a multi-asset setup than a single asset setup.
True,
If you look at more organized or evolved markets, retirement money invariably goes into multi-asset setups, right? Or constructs. We will see that happening. We are already seeing that beginning to play. But in the hybrid category, in the next 5-10 years, I won't be surprised if that becomes the largest category.
Okay. All right. So 3 headlines I want from you for 2026. What would that be?
I think asset allocation needs to be relooked because all rules of asset allocation have changed.
Right.
Second, I think it's great if one could accumulate mid caps over other two, because it gives good opportunity. Portfolios have not bought mid caps. And third, I think it is behavior over asset class anytime. The person who behaves better in a more sane manner will create more wealth in 2026 onwards.
Okay.
The biases that you have in mind about everything, if you leave that behind on 31st December and look at investing with all the new data points in place, is what will help you create.
That will do the magic for you in your portfolio. Yes. So what's that 2026 investment movie theme according to you?
Naya Daur?
Naya Daur?
Yes, it's a new Daur.
Totally, All right. And for that, it's a wrap. Thank you so much and wish you a very happy new year. And for all the viewers, you've got all the information and all the tricks and trades, to form your portfolio in 2026. So all the best and happy new year to you too.
Thank you. Wish you a very happy new year and happy investing.